Ladies and gentlemen, good day and welcome to the Salzer Electronics Limited Q2 and H1 FY25 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Poonam Sanghvi from Progressive Shares. Thank you, and over to you, ma'am.
Thank you, Neha. Good afternoon, everyone. On behalf of Progressive Shares, I welcome you all to the Q2 and H1 FY25 post-earnings conference call of Salzer Electronics Limited. This conference call may contain forward-looking statements which are based on the beliefs, opinions, and expectations of the company as of the date of this call. These statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. I now invite Ms. Savni Mangde for the opening remarks to be followed by a question and answer session. Over to you, ma'am.
Thank you, Neha. Good afternoon, everyone, and thank you for joining us on the call today to discuss the unaudited financial performance for the quarter and half year ended 30th September 2024. On the call with us, we have Mr. Rajesh Doraiswamy, Joint Managing Director, Mr. P. Sivakumar, Assistant Vice President Marketing, Mr. S. Venkatachalam, General Manager Commercial, Ms. R. Menika, General Manager Accounts, Mr. K. M. Murugesh, Company Secretary, and Mr. Raman, Chief Operating Officer, AC Industries. I shall now take you through the consolidated financial performance of the quarter and half year ended September 2024. During the quarter, our revenues increased by 23% to rupees 344 crores from 281 crores in the previous corresponding period. This growth was mainly driven by higher demand for industrial switchgear as well as wires and cables businesses, mainly due to high demand products like three-phase right-arc transformers, wire harness, relays, and new products like contactors, etc. The EBITDA, excluding other income, was rupees 35 crores in Q2 FY25 as against 27 crores in Q2 FY24, a year-on-year growth of 32%, mainly on account of increased sales in the higher margin switchgear products. The EBITDA margin for the quarter increased by 72 basis points to 10%. The PAT grew by nearly 170% to rupees 27 crores in Q2 FY25. Coming to a half-yearly financial performance, in the 6 months ended September 30th, 2024, the net revenue was rupees 701 crores as against 569 crores in H1 FY24, a year-on-year growth of 23%. This growth was driven by the businesses of industrial switchgear and our wire and cable. The EBITDA, excluding other income, stood at 69 crores in H1 FY25 as against 53 crores in H1 FY24, a year-on-year growth of 30%. This was mainly on account of higher sales in high-demand products like wire harness, relays, contactors, etc. The EBITDA margin was 10%, a year-on-year increase of 52 basis points. And the PAT was 42 crores, a year-on-year growth of 107%, with the margins at 6%. Moving on to the breakup of revenue as per business division, the industrial switchgear contributed 62% of the total revenue in this quarter and 57% in the first half of the year. This business has grown 34% year-on-year in Q2 FY25 and 27% in H1 FY25. The EBITDA margin for this business was at 12% in Q2 and 13% in the first half of the year. Coming to the wires and cables business, this business contributed to nearly 34% to our revenues in the quarter and 39% in the first half. There has been a 10% year-on-year increase in this division during the quarter and 21% in H1 FY25. The EBITDA margin for this business stood at 7% in Q2 and 6% in H1 FY25. Coming to the building product division, this business has contributed 5% to our revenues in the quarter and 5% in the first half of the year. Coming to exports, we continue to see a steady growth, mainly due to higher sales in Middle East and African countries, as well as North and South America and Asia. Exports to the Americas grew 7% year-on-year. Asian countries grew 17%. Middle East and Africa grew 43% combined year-on-year in this quarter. So this quarter, the export share of the revenue was nearly 29%, while for the full year, it was 28%. Growth in exports has been 3% year-on-year in this quarter and 17% year-on-year in the first half. Thank you, and I would now like to hand it over to Rajesh to take us through the business development and way ahead.
Thank you very much, Savli. I would once again like to warmly welcome all of you to Salzer Electronics Earnings Conference Call for the second quarter financial year 24-25. Thank you all for taking time to join us today. We have shared our results update presentation and the media release. I hope you all must have read it. And also, I think Savli explained in detail about the financials just now. A little bit about the outlook and the future. On the market outlook, as you all know, the global switchgear market size is close to $94 billion in 2023 and is expected to reach $150 billion by 2032 with a 5.5% CAGR during the forecast period 24 to 32. This growth is mainly driven by increasing demand for electricity, expanded use in transportation, renewable energy investments, rising electricity needs from manufacturing, and replacement of old switchgears. Key trends include the adoption of digital technologies, innovation and development of products to meet power generation, investment in eco-efficient solutions, the deployment of IoT-enabled switchgears for automated operations, and promotion of automated switchgear for smart grid operation, and the development of various specialized switchgears for critical industries. Coming to India, the Indian switchgear market is projected to grow by $4.14 billion with a CAGR of 7.5% from 2023 to 2028 for the next 5 years. This growth is again driven by the investments in infrastructure, industrialization and urbanization across the country. Furthermore, India's strong push towards renewable energy, particularly solar wind, underscores the need for robust switchgear solutions in renewable plants and grid integration projects. Additionally, the adoption of smart grid technology requires advanced switchgear that enables automated and remote operation, further fueling the demand in the sector. At Salzer, we are committed to swiftly adapt to these evolving dynamics as always, embracing a proactive approach to drive growth and resilience. We see challenges and opportunities for innovation and evolution and have strategically positioned ourselves to respond effectively to changing economic and technical landscape. As we broaden our product portfolio and pursue new growth avenues, we remain confident in our ability to achieve our strategic objectives and deliver value to our stakeholders. Coming to the key developments on the business performance, as a part of our growth strategy, I'm very pleased to announce that we have received our first order for the smart meters for a value of ₹5 crore from a leading AMISP in India. Though this is a very small step forward, but this is a big achievement and it is a testament to our team's dedication to advancing smart metering technology. Our solution has garnered significant interest with evaluations currently underway by various AMISPs across India. We are also in advanced discussions with these partners and are very optimistic about securing further quantity orders. This momentum reinforces our commitment to supporting India's digital transformation in energy management through cutting-edge smart meter technology. On the EV charging market, we are focusing on the DC fast chargers. We are positioning ourselves as a supplier to various charge point operators. While this market is still in its very early stages, we see promising growth potential with an estimated need of 1,000 chargers for India. Though we anticipate competition, the capabilities will allow us a share of emerging markets. Our wholly owned subsidiary is being established to manufacture products aiming to meet the local demand and enhance access to various GCC markets. Looking ahead, we have a positive outlook for the switchgear segment, projecting a growth of over 20%, driven by strong demand in both domestic as well as export market. Exports are expected to gain momentum in the coming quarters. On the domestic front, we are seeing substantial growth potential across various sectors, including power, renewables, data centers, new factory setups, which will drive demand for our products. Coming to our subsidiary, KC Industries Limited, the sales have been growing well and EBITDA margins are also getting better. KC's top line grew 13.3% to rupees 13.34 crore from 11.77 crore last year. EBITDA grew 41.5% to 2.15 crore from 1.52 crore last year. PAT margins in H1 FY25 stood at 11.5% as against 8% in H1 FY24, which is an improvement of close to 3.5%. Looking ahead to FY26, we anticipate robust revenue growth, projecting a 20% increase in our existing businesses, aiming to reach close to around 1,600 crores in total revenue. The smart meter segment alone is expected to contribute an additional 700 crores approximately, underscoring its strategic importance. Furthermore, we are focusing on margin improvement, targeting a margin of at least 11% EBITDA by FY26 as we drive operational efficiencies across divisions. For FY25 and beyond, our growth strategy is rooted in diversification into high potential markets such as DC fast charging and smart meters, both of which are expected to add significantly to our top line as well as bottom line in the coming years. I thank the entire team at Salzer Electronics for their untiring efforts and all our stakeholders for your continued support and faith in our company. This is all from our side for now. I would like to thank you all once again very much for your time and attention. We can now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participant, you may press star and 1 to ask a question. The first question is from the line of Vipin Abraham from Integrate Technologies Private Limited. Please go ahead.
Sir, congratulations on a very good set of numbers and also very good outlook for the next year and also for the order on smart meters. My question is that, sir, the other income what we have seen in this quarter of around 15.6 crore rupees. What is that pertaining to and would that continue?
The other income includes profit on sale of shares of our subsidiary, KC Industries Limited, to the extent of 1.5%. So that contributes to around 15.6 crores, and that's what is in the other income.
Oh, all right. Thank you.
So to add to that, I would just to add one more point for all the participants today. So that other income is a part of the profit today. I think that's why we see a substantial increase in PAT, close to 170%, from 10.10 crores last year to 27.28 crores this year, which includes this other income. But if you remove the other income and also remove the long-term capital gain tax that we paid on the tax, the net impact will be around 13.8 crores on the PAT. So even without that, our PAT will be at around 13.5 crores, which is still a 33.5% growth compared to last quarter. So that's the point that I would like to highlight here for other participants. Thanks for bringing this up, sir.
Yeah. I have one more question, sir.
Yeah.
The smart meters, I know we are actually about to start. There are already a lot of players also coming to that segment. And what kind of margins do you expect, from the smart meters, approximately for the next year?
I think we are definitely expecting not less than 12 to 14% of EBITDA margins is what we expect in smart meters. But as we go along, we will know how this business again pans out. This is looking to be a very high volume, high value business. And as you said, there are also a lot of new competitions that might come in, and we have to see how the business pans out. Because as of now, we see EBITDA can be between 12 and 14%.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, I'm audible, sir.
Yes, sir, very much.
Yeah. Thank you very much, sir, for this opportunity. So first up, just a clarification. You mentioned 1,600 crores of revenue FY26 with 11% EBITDA margin. That's on switchgear segment, right? And smart meter 700 crores at 12 to 14% EBITDA margin will be over and above that.
1,600 plus 700 is what we expect for FY26.
Yeah, and switchgear would be 11% EBITDA margin and smart meter 12 to 14%. That's what I got.
Yeah, 12. Yes. No, 11%. No, sorry. The 11% EBITDA I said is a blended margin overall for the company.
Oh, okay. 11% is the blended margin. Then what is the switchgear margin we are expecting for next year on 1,600 crores?
Out of 1,600 crores, around 50 to 55% will be the switchgear business, and the rest will come from wire and cable and the building segment.
Okay.
So the switchgear margin EBITDA we expect around 12.5% approximately.
Okay. No, so just a clarification. This blended margin of 11%, that excludes the smart meter. I mean, except smart meter, whatever the business, all the 2-3 segments, blended margin would be 11%, right?
Correct, sir. You're right. Yeah.
Okay, fair. And what about FY25? I mean, I missed if you have mentioned about FY25 as well in terms of output.
FY25, I think we already mentioned in last quarter, we are definitely expecting to grow between 20 and 23% in the top line as well as in the bottom line. Looks like I think we are in line with that projection as of now. This is excluding the smart meters again, and we don't expect big revenues to flow in from the smart meters for this year. However, we expect to secure orders in this financial year.
Okay, so earlier we were expecting some revenue to come from smart meter, right? Maybe
yes, we expected around 200 crores of revenue we expected, but looks like that might not happen because we are only around 4 or 5 months away right now from the year end. And even if we are ready to supply after the orders, I think the customers won't be ready to take the orders and install the meters to that extent. Though we will see some revenue, it won't be to that extent.
Understood. And this 20-22% on top line, bottom line is blended company level, right?
Yes, sir. Yes.
Okay. Fair enough. I think that would be it from my side. All the very best to you. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Prathamesh Diwar from Tiger Assets. Please go ahead.
Yeah, so just a couple of questions. First one is regarding the smart meter side. I think earlier for 2026 we have projected around 1,000 crores of revenue to be coming from smart meters, but now we are expecting around 700 crores. So is there any, like, order delays from the industry standpoint? I'm trying to understand.
No, there's no change in what we have said. I think the capacity that we have set up is still at 1,000 crores, or around 1,000 crores, a little bit more than that. We are just being a little pessimistic, looking at the market scenario and looking at how the customers are giving the schedules for the orders. So we expect that this can be a realistic figure for FY26.
Okay, fair enough, sir. And so, like, how has been industry orders been performed in smart meter side, let's say in last 6 months? Has there been any delay in, like, tenders coming to the markets because of election or some other reason?
Can you repeat your question, sir? I think your voice is still not very clear to me.
Yeah. Am I audible, sir?
You're audible, but it's not clear.
Okay.
Repeat the question.
Yeah, sure. My question was regarding the industry in the smart meter side. Like, till now, has there been any delays from the government for bringing up the tenders? So how has been the industry overview as of now?
Yes, I think post-election, there's one or two tenders have come up and some bidders have won. But the process is actually a very slow process. Even after winning the bid, there is a reverse bidding that will happen, which will take a month or so to complete. And then there's again a lot of process that the bid winners have to undergo before they secure an LOI from the government to start the work. So it's a long process that's happening post-election. Definitely something is happening. I'm not saying nothing is happening. But wherever the tenders have already been awarded, the tender winners are working in the field to start the installation of the meters. Though it is starting slow, it is still starting. But then this is a field area where I think the initial start will definitely be slow because it's very complicated in the field to install a smart meter. There are multiple challenges for the bid winners to start the process in a full-fledged manner and at a very fast pace. So that's why I think the things are a little slow at this moment. But I'm sure that with the objective of the government, with the way that these people have won the tenders and things are going on, things will pick pace as in the next couple of quarters.
Okay, got it, sir. Just, sir, if I want to talk in terms of numbers, so in industry for FY25 and for FY26, how much has been the outlay for smart meters? And let's say for this year, how much government has spent out of total FY25 outlay for smart meters?
As far as the information, it's all in the internet. I think if you go to the RDSS website, there's a website for this specifically. You can find all information. As far as I know, I think approximately 1 crore meters have been installed until now, out of whatever has been tendered so far.
Okay, got it, sir. I think thank you so much.
Less than around 7% of the total tender quantity.
For FY25?
Yes, for FY24.
Okay.
24, 25. Yeah, until now.
Okay. Thank you so much, sir.
Yeah.
Thank you. The next question is from the line of Naman Parmar from Niveshaay Investment Advisors. Please go ahead.
Yeah, good afternoon, sir. Thank you so much for the opportunity and congrats on the great set of numbers. So I just wanted to know on the EV charging side, so currently how much means in the industry is, if you see majorly control unit and the power module. So what's the status by the government? It has been indigenized by the June 24 and December 24.
Say that again, sir. Control unit and power module. What is that?
Control unit and power module. So control unit used to be indigenized by the June 24. So any update on that side that it has been majorly indigenized or procured from India only, or it is still import from the?
There is no mandate or anything from the government on such things. I have not heard about anything like that. There are a lot of components within the charger that is being produced locally, and there are a lot of components we produce it ourselves. But there are certain components that needs to be imported from various other countries, including China, which we are doing. And I have not heard about any mandate or any percentage or anything like that so far.
So on the EV charger side, so you will be selling this to the OEMs like all marketing company, or you will be staying as a CPO charging point operator for them?
We will explore all opportunities. I'm not saying that we will not do this or do that, but we will find all opportunities. We will sell to charge point operators. We will sell to OEMs if we get an opportunity. So we look forward for all areas.
Okay. And lastly, means you have get the test pass for the EV charger. Your one test was left to be passed, right?
We are trying a different route to get the test passed on that. So I think once we do that, I think proper information on that we will be giving it to the market. Until now, that particular test is still not passed, but we are trying to find an alternative to overcome the requirement and then pass the test.
Okay. Okay, that's it. Thank you so much.
Thank you, sir.
Thank you. Participant, you may press star and 1 to ask a question. The next question is from the line of Siddharth Vemuri from Caprice Financial Services. Please go ahead.
Hi, sir. This is Siddharth. I'm quite new to this company and I've joined this call a bit late. So could you again, repeat, FY26 and FY27 numbers, sir?
Sir, I think there's a lot of numbers that have been given out. So I think it will be very difficult for you to capture if I give just the final numbers, because there are different segments of business, different segmental growths, geographical growths, and projections. So
I know. So
for you also, if you have not followed earlier, it will be very difficult for you to understand, even if I give the numbers out.
Okay. Thank you.
Thank you. The next question is from the line of Pranjal Mukhija from Growth Sphere Ventures LLP. Please go ahead.
Hi, good afternoon. Am I audible?
Yes, sir.
Hi, sir. Congratulations on the good set of numbers. So I have a couple of questions on the smart meter side, sir. So initially you spoke about how you got one contract worth 5 crore, right, from one of the AMISP. Can you just throw some light on the kind of volumes you have to supply under this contract?
The specifics regarding the quantity of smart meters have particularly not been disclosed because of the confidentiality agreement. And also, we don't want to give the pricing ideas to the competition. So that's the reason that we just set the value of the order, and also the customer details have not been disclosed because of the contractual obligations. So we will start invoicing for this 5 crore smart meter order from this November or starting December, and we will see some revenues coming in the smart meter business in this quarter. Though it is small, I think that's a significant first step for us.
Sure. That's okay.
I hope you understand our position.
Yeah, I get that, sir. So the second question was, sir, what all states are we targeting for smart meters? I mean, where do we see the incremental demand coming from?
So we are looking into targeting all states, because the different AMISPs have taken orders in different states. I think the first initial implementation is happening in Gujarat, in West Bengal, in UP, in Maharashtra, and also Punjab. So these are some of the states that the implementation is happening, and AMSPs are procuring the meters for these states. So this is where our concentration is right now for us. And going forward, it will be for the other states also, including Tamil Nadu or Telangana or Andhra Pradesh.
Okay. So, sir, are we only focusing on, our focus will be only on smart meters, or maybe 2-3 years down the line we will also want to forward integrate into the, let's say the communication tech piece or the HES or the MPMS? Or are we going to solely stick to smart meters? What will be our plan here?
As of now, our focus is on manufacturing of smart meters and doing anything around smart meters. What you are talking about is a software integration with the smart meters. So right now, we are not really looking at anything on that because we are trying to partner with various software developers or people who already have HES and MDM. So we are trying to partner with them and then give a wholesome solution for the customer. That's what we are trying to do now.
All right. And so one final question. Just like a quick overview of on the competitiveness of the industry. Because we're seeing like a lot of players are entering the industry and in the current bout of that, 11 crore meters that have been given out, I think majority of them are, I think, sort of, people have already like bid for a major chunk of them. And I just wanted your like piece on your understanding on like where do we see the margins going forward in the industry? Because I think right now most players are operating at 14-15% margin. But with the increase in competition, like maybe 2-3 years ahead, like where do you see the trajectory of these margins going ahead?
Yes, I think so. As you said, this around 13-14 crore orders have been given out already. Tenders have been given out, and that's what I mentioned earlier to a question. Approximately around 1 crore meter have been installed in the last 1.5 years or something, which I said is a very slow pace because that is how this process starts. So definitely future there will be more competition, things will hot up, but it also we have to see how many will remain in the market because this is a very complicated product. It's not a just easy product that you will make it because you need to be there in the field for 10 years next after you supply the meter. There is a 10-year warranty. You have to maintain it. The product has to work for 10 years. So it's a long-term play. So it's not a short-term play. So we will have to see how it evolves, how the competition is going to remain in the field for a long time. And that is where I think these margins will get fixed. Whether the supply is too much for the demand or the demand is too much for the supply. So it depends on that, and that's where the pricing. Today, people are getting better margins because there is too much demand and the supply is less. So definitely it will come down, and that's why I said that it will start for us in a year between 12 and 14%. But as we move forward, if the competition is still high, it might drop by around 1 or 2% from there.
So the reason I was asking this question is because there are some big players already that are playing in this market, and given that like a company like Salzer, I mean, you guys are targeting around 40-50 lakh meters, right? In the previous few calls, you mentioned that number. So I just wanted to understand like what will be our right to win in this industry when like the order books like the basically tender pipelines for like are already getting consolidated and again like we're a very new company in this segment and
the order book is not consolidating. I think that's not a right notion to have because order book is consolidating with the AMISPs and the AMISPs are looking for the meter suppliers. So that the second line order book is still not consolidated. They're just evaluating because there is no supply today of smart meters to that requirement, and the customers are also not ready still to pick up that kind of a volume from the suppliers. So it is still evolving. That is what I said. The meter manufacturing scope in portfolio is still evolving. So you will see how and who are all customer suppliers coming into this field in the next 3, 6, 8 months. And as you said, what is our right to win? I think we've already proven to almost all the AMSPs that we are working to showcase that. I think our smart meters is one of the top class comparable to any of the other India's top quality smart meter manufacturers. And that's why I think we were able to secure the first order, and we are in very close negotiation to secure the next set of orders also from these AMSPs. So our right to win is going to be our quality and service.
All right, sir. Thank you. Thank you for this opportunity.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Mohit Madiwala from Envision Capital. Please go ahead.
Hello, sir. Thank you for taking my question and congratulations on a good set of numbers.
Thank you, sir.
So the first question was on the industrial switchgear and the wires and cables segments. So we have seen very strong growth in H1 FY25 on both these segments. I just wanted to kind of understand, is this due to, or rather, is this due to winning new clients, or is this due to upselling, let's say, higher value products to existing clients? Is it a mix of both? Any light you can, anything you can share on that?
No, I would say that it's a normal growth that is coming from various industry sectors. As you've seen, both industrial switchgear and wire and cable have been giving almost 20% plus growth in this H1. So there is nothing specific, no new products. Of course, there are some new clients which are not very significant that we have added. So this is a very normal growth that we are seeing in the industry because of the economic activity that is happening.
Okay, sir. Understood. And in each segment, I think I missed it initially. Could you please repeat the EBITDA margin for each segment in Q2?
The EBITDA margins in Q2 for, I would say H1 or Q2? Q2.
For Q2, industrial switchgear and wires and cables.
It's around 12.5% industrial switchgear, 7%, 6.9% for the wire and cable. At the building segment, we are still at negative 4%.
Okay, sir. Understood. So just coming to the building product segment, I just wanted to understand specifically what are the major products that are sold in this, and any reason for this flattish kind of H1 performance in building products?
Building products includes the switches for home, the wires that we use for the buildings, house wires, the circuit breakers, distribution boards, and changeovers, and some accessories, all the electrical accessories that we use. So these are the products that's in this segment here. And I think the segment as such is a retail segment where we are operating. We are still not expanded beyond the 5 southern states. So the region also is limited for us. So within the region also we are not very aggressive because I think this will burn a lot of cash if we are too much aggressive in this. So we are going slow in this, and that is also a reason we see a very flattish growth in this. We expect to push on this business segment and improve the sales and see how it can grow to become another under 200 crore segment for us internally. I think that's where our target is. We're trying to push there and see how we can get there. There are some internal realignments we are doing. Hopefully we'll see some improvements post this next 2 quarters.
Okay, sir. Fair enough. Understood. And just one last question, if I may. Any specific reason for the stake sale in KC? Because as I understand it, it was more of a strategic investment. So any specific reason for the stake sale?
There's no specific reason, but we saw some good valuations, and so we thought we will dilute some stake. And it was just 1.3%, and we still continue to hold 70% plus with the company. And it's definitely a strategic investment. We will continue to run KC Industries.
Okay, sir. Fair enough. And good luck for the future. Thank you for answering my questions.
Thank you very much, sir.
Yeah.
Thank you. The next question is from the line of Mayuresh, an individual investor. Please go ahead.
Thank you for taking my questions. My question is regarding the EV charger business. I see it's taking too much time. It's taking more than 6 months for us to get clearance. And do you have any strategy already defined in terms of timeline? As soon as we get the clearance, what will be our production capacity, and how many units per year do we plan to produce on the EV charger business?
Yeah, I think before this financial year is what is the timeline that we have fixed. We should be able to move forward on this business. And the capacity,
so we do have a production unit being set up or already set up.
We already have a capacity set up for 100 chargers a month.
Okay, 100 chargers a month. And all of them are DC chargers?
Yeah.
And for, I see you had given the projection of 2,300 crores for FY26 for smart meters and for the switchgear business, but I did not hear anything regarding the EV charger business. So looking forward, what kind of sales do we see in terms of EV charger business, considering the fact that it's
we will be able to give a projection. We will be able to give a projection on EV chargers once we are fully into the market with the product. So that's why we have not projected anything for EV chargers for FY26. That is one. Secondly, we don't really expect FY26 can be a big year for EV chargers. So EV chargers, the real big business can start post FY26 is what we expect.
Okay, so from end of 2027 or something like that, or mid 2027, it will pick it up.
Yeah, FY27 can be a good year for EV chargers. Though FY26 we might see some revenues, but it's not going to be significant enough in this 2,300 crore projection.
Yeah, and what is the reason behind the delay? Because the joint venture was formed in 2021. Costard is an already established player in Europe. They do have good technology. It's been almost 3 years, but we are not able to develop a product and put it in the market yet. To see 2027, it means almost 5 to 6 years taken to develop a product and sell it. It's a long time, isn't it, sir?
I agree. I think it's a very long delay. There have been multiple challenges. Everything technically, I think we were not able to solve a lot of issues. And when we started, there were not enough domain knowledge people around in India to absorb the technology and take it forward. So like this, there were multiple reasons. And that is the reason for this very long delay. But now I think we have come to a understanding how this works, how this entire industry works, how the product is, what the product is. So we now know what we are doing. So in the next 6 months, I think we will see good progress in this area.
Thank you. Thank you very much for answering my questions, and good luck.
Thank you. The next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, good evening, sir. So I have joined a little bit late. Maybe I could have missed the information. So I think we are going to grow in FY25 by 20-25%, and FY26 is guided for 2,600. Is that right?
Yes, sir. FY25 we will be growing around 20 to 22% is what we have projected as a company, excluding smart meter business, and we don't expect significant smart meter revenues coming in FY25. For FY26, our top line for our existing business, we are expecting again around 20%, which will take us to around 1,600 crores, and we expect around 700 crores coming from smart meters, which is around 2,300 in total. That's the breakup that we have given.
Okay. Okay, sir. And so in FY26, we can expect some improvement in margins being some business.
Yes, sir. We are looking for at least around 1.5-2% improvement in the margin from the current levels on the EBITDA levels, at the EBITDA levels.
Okay. And smart meter side, sir, I think we are in discussion with a few customers you mentioned in the presentation. So is there any further progress so far?
Yeah, we have already received the first order for 5 crores, and we are in advanced discussion with the same customer as well as various other customers for further quantity orders.
Okay. Can you update on this Tamil Nadu tender, sir, whether it's finished or what?
No information out yet, but I think as soon as they finalize the tender, the information will be out for us to see. So far, no.
Okay. And lastly, on the EV charger side, so I think the testing was done at the time of we have filed in one test. So any further progress on that side?
It is there's no further progress on the testing, but we are working to solve the issue and then get this forward. So just now, before you joined, I answered one participant about the timeline. I think before end of March this year, we should be solving all issues on the charging area and then come out with a plan for this business.
Okay. And lastly, on this, our subsidiary investment in the Hyderabad-based EV charging company. So what is the contribution from that? So how we are going to take any advantage of that business? How it will contribute to sales?
I think it's still very initial stages for us to comment on that. Maybe in the next call or so, we will know. We will give you a plan for that investment also. How we are going to work on that and what advantages that we will have out of that investment.
Okay, sir. And any new products in the existing in the traditional business we are introducing in the coming quarter or this quarter?
No, sir. No, nothing significant. We are just focusing on consolidating whatever we have done in the last year, smart meters and charging. Once we do this, then we will see how we can move forward with other areas, other new products.
Okay, sir. That's all. Thanks a lot. All the best.
Thank you, sir.
Thank you. The next question is from the line of Rajesh, an individual investor. Please go ahead.
Thank you for the opportunity. Sir, my question is from the transformers business. So basically, how big is your transformers business in terms of annual revenue? And also, we keep hearing about a lot of demand for power distribution transformers, renewable energy transformers. So given that, are you looking at increasing your capacity and range of transformers business?
Sir, our total transformer business, approximately, because I don't have the product-wise sale breakup with me, but I know approximately we will be doing around 250 crores to 300 crores of transformer business in the current revenue, approximately. And I want to be very specific here. We are not into manufacturing distribution transformers. We are not supplying any transformer to the discoms or utilities. Our transformer business is in the low voltage segment. We make single phase and three phase low voltage transformers. Low voltage, I mean, it's at the maximum, it can work at 690 volt. So it is all for the application within the buildings, within the equipments, is what is the application of these products.
Okay, sir. And how do you see the growth prospects here?
The growth is quite good. I think the product has been growing very well. In H1, I think our transformer business has grown again close to around 30% plus year on year, which is actually one of the main reasons that our switchgear business also in the H1 has grown significantly.
Okay, sir. And one last question. So you said you are not into the utility related transformers. So, I mean, is it logically possible to get into that? And is it worthwhile business for you to consider?
No, we are not focusing on that product line right now.
Okay. Thank you.
Right.
Thank you. The next question is from the line of Nanda Kumar, an individual investor. Please go ahead.
Good evening, sir. Can we expect any more stake dilution in KC Industries?
It's a difficult question to answer. Yes and no. It depends on the situation where we are going to be in the next future. We won't definitely disturb the market, but if there is an opportunity, there are multiple ways to do it if required. Otherwise, no, we will continue to stay with 70% stake as of now, 70% plus.
Okay, sir. And my second question is, how can we expect the debt levels to be at the end of the year?
Debt levels right now have increased compared to what it was in FY24. But I would say it will remain at this level. We are at around 320 crores debt in working capital and 17 crore term loan, which is for the smart meter factory and other investments that we have made. The term loans might go up a little bit by 2 or 3 crores maximum. Our working capital will remain at this level for this financial year.
Okay, sir. Thank you. That's from my end.
Thank you. The next question is from the line of Prasan, an individual investor. Please go ahead.
Hello?
Yes, sir.
Yeah, so my first question is regarding the Saudi Arabia plant. So when will the plant be commissioned, and what would be the projects that would be manufactured? And the revenue at 100%.
The revenue?
And revenue at 100% capacity utilization, and what would be the EBITDA margins?
Our idea is to manufacture our existing industrial switchgear products, some of the industrial switchgear products in Saudi Arabia. That is the idea. So we're not taking all our products and going to manufacture there. And the idea also is to do this on a leased space. So our investments are going to be only on the machineries and equipments. This is the idea that we are planning. So for now, I think we have established a firm there, an 100% subsidiary, and we are looking for a place and then completing other formalities of Saudi Arabia to get the visas and things like that. So once this is done, because there is huge demand for space in Saudi Arabia as of now. So we have applied for a space and we are waiting in the queue. So once we get the space, then our operation will start after that. So we expect that this will happen 4 to 6 months from now. That is the timeline that we have got from various Saudi Arabian authorities on the getting a space. So once we get the space, we will start the operation, and this is going to be a 10 to 12 crore of investments in the equipments and machineries. And in 2 to 3 years' time, we should be able to see a 100 crore revenue coming from Saudi Arabia.
Okay. And any rough idea on the EBITDA margins?
It will remain at the levels that we are doing right now for the switchgear business. With a slight improvement maybe because we are going there. Our price advantage will be there, and then the advantage of locally made product will be there. But then before committing, then we will have to really see how the operations start evolving there. But definitely not below than what we are getting right now in our switchgear business.
Okay. So my second question is regarding, have you received the necessary certifications for the three-phase smart meters?
Yes, we have received.
Okay. And what is the market split across single phase and three-phase smart meters?
I think 85% is single phase, 15% is three phase. That's the rough separation that we have today.
Okay. And also, is the company participating directly in the smart meter tenders?
I think I mentioned this already in some previous calls. Yes, we are not ruling it out. If we get an opportunity, we will definitely participate because we already have the AMASP license. And the only thing is we need to have some experience, for which also we are working with some partners who can be consortium partners to bring the experience to us. So we are not ruling it out, but there is nothing significant happening as of now.
Okay. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Chinmay Nama from Prasant Capital. Please go ahead.
Good afternoon, sir.
Good afternoon.
First question about a general question on the smart meters business. Just want to understand, is this, could you give some color on the manufacturing? So is it essentially a assembling business where you're sourcing parts and then assembling them, or is there is there a large component of in-house manufacturing going on?
It's a large component of in-house manufacturing is what we are doing. Of course, every product needs a final assembly, which we are doing definitely there, but we also do a lot of backward integration and do a large part of manufacturing in-house.
Okay, sir. And what about the software part of it?
Software part of it is we have developed the software and it is with us.
Okay, sir. And secondly, just wanted to double check on the guidance. So in the previous quarter, you had guided around 200 crores of revenue from this vertical division in this year. However, I think you've changed the guidance in this quarter. So just want to understand what went wrong over there, or if you could provide any color on that.
Actually, nothing went wrong. Maybe last quarter I mentioned this. I was expecting that we will have the orders by now and we will start executing from now, and then before end of March we will be able to see that kind of a revenue. But looks like it might not happen. Though we might secure the orders, we might not be able to execute, or the customers might not be able to absorb these supplies. So that's why I'm changing what I said in the last quarter. But I'm still optimistic that we will definitely secure the orders in this quarter, and we'll see some revenues. It cannot be to the extent of 200 crores or 100 crores, but definitely some revenues we will see on smart meters in this year.
Got that. Any color on the conversion kits business? My line dropped off, so I'm not sure if you have already covered it in the call.
I think the business was shut down, closed. We're not proceeding on that.
Okay, sir. Thank you.
Thank you. The next question is from the line of Jagadish Sharma, an individual investor. Please go ahead.
Sir, thanks for this opportunity. Congratulations for the result. I have two questions. First one is, what is the TAM for the EV charging market which you have mentioned right now, sir?
What is this?
TAM, total addressable market for the EV charging. You just mentioned in the opening remarks.
I just mentioned I expect that there were 800,000 chargers might be required for the country if we start adopting the electric vehicles.
800,000. That is 8 lakh.
Yeah, that's 8 lakh chargers over a period of next 5-10 years.
In the next 5-10 years. Okay. Yeah. My second question is, sir, we have been entering into smart meters, EV charging, like Gen Z business, new gen business, right? Are we also planning to enter into railway coverage by any chance?
Which one?
Railway coverage, coverage system.
No, I didn't get it. Railway
coverage, the protection. Which, yes. Yes, sir.
No, the train protection, accident protection system, right?
Correct. Because all are in the same place now. So are we planning to enter, or are we even thinking about entering it in the future, sir?
No, sir. No, we are not. There's no plan as of now. But you have given a good idea. We will look into this.
Great, sir. Thank you, sir. If you are entering, let us also know. It will be great.
Of course, it will be. The market will know if you do that, something like that.
Definitely. Thanks, sir. Please look into it. Thank you, sir. All the best.
Thank you. The next question is from the line of Suresh Parekh, an individual investor. Please go ahead.
Yeah, thank you. My question is regarding smart meters. So what is the install capacity, volumes for smart meters, and what kind of volumes do we expect for the year FY25 and FY26?
So capacity is 40 lakh meters.
Okay.
At full capacity, it will be 1,000 crore revenue.
Okay. Thank you.
Thank you. The next question is from the line of Ankur Agarwal from RC Business House Private Limited. Please go ahead.
So my question on the debt side, what is your plan to reduce debt in future?
Sir, I think once we start seeing positive cash flows, and then, when we slow down on the new investments and new growth area investments, I think that's when you will see the working capital going down.
That table today is,
right now we still are at a good interest coverage ratio, so we are not worried on that. But we will also ensure that we are not really going over and above what we are right now.
Not add any debt in future.
Yes.
Okay, that's all. Thank you.
Thank you. The next question is from the line of Nilesh Mehta from NSR. Please go ahead.
Hi, sir. Congrats for the good set of numbers. I'm just wondering if you can just give me an overview of the EV market for the next phase, current status, and what are the developments that are taking place from the government side, please.
The government is trying to encourage EV definitely in various aspects. However, the EV adoption has been a little slow. Not just here, I think even in Western markets, it has slowed down a bit, is what we understand from various market sources. So India also is definitely a little slow in adopting electric vehicles. But nevertheless, I think if you look at China, I think the adoption has been wonderful. Close to around 40% of vehicles today are electric vehicles in China. It's one of the largest electric vehicle market today in the world. So I'm sure that I think it will start happening here because we are also a very similar country, and definitely there are advantages in electric vehicle. So the charging market space I just mentioned, I think if we start adopting at that pace, we definitely would need close to around 8 lakh chargers across the country over the next 5 to 8 years or 10 years. So that's going to be a large market. This is a very approximate projection because the market is still evolving. The prices are still not fixed. The price points will keep varying depending on the volumes. When we start, there's a price point, and then when the volumes come in, I think a lot of things will change. It will start declining. So it's very difficult for now to put a value for a charger and say that this is how it is going to be. So as we move forward, we will know once how it moves goes.
Okay. Thanks. This is the information I wanted. Thanks a ton.
Yeah.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand the conference over to Mr. Rajesh Doraiswamy, Joint Managing Director of Salzer Electronics Limited, for closing comments.
Thank you very much, everyone, for your enormous interest in Salzer's growth story, and I'm sure that we will do all that we can to ensure what we have committed is happening. So thank you very much for listening to this, and looking forward to interact with you soon in the next quarter. Thank you all.
Thank you. On behalf of Progressive Shares, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.